And we are live, 5th of May 2022. Today we're going to talk about support. So support is a respected level of price that is identified by a horizontal line or a zone. So we can identify support here. We want to be, in a range where there is liquidity, which usually is dictated by the wicks here. So bang, liquidity, prices push back up and close there. Liquidity, and then a liquidity grab, trying to probably potentially take the people out at this level and moving up around here. So this is an area of support on the 30-minute time frame, and all time frames have all different levels of support. You can go on the weekly. Yeah, there's definitely an area of support here in those wicks, and the wicks are very important. So yes, the candle close and where it closes is important as well, but the wicks show the range. So we have the range here, the range here, so that we can identify on the lower time frames where the range is and where it was strongest on the higher time frame, which was in these areas here, because price came down here and rejected and came back up. So our area of interest of support on a higher time frame would be in these areas. Okay, let's have a look on gold. So we have another area of support in here. So obviously we could get the best buy on this week, by marking and identifying the support level on here, and we can mark this as weekly support. Weekly support. Alright, so now we know we have that zone marked. Now we can go on to the daily and we can have a look what's going on. So yeah, look, we get a double bottom in the daily, right here, bang bang. So we have a support zone all throughout here, and a double bottom in that weekly. This is a clear buy signal for me anyway. I don't necessarily have to buy the bottom, but having a bullish engulfing here and then having a bullish engulfing, now some people might think that the bullish engulfing has to be from the candle open to the candle close, but if we look at the wicks, we've got a low wick there but a high wick here, so it still has the range that breaks this bearish candle here on it, and especially on a daily time frame. So therefore we have a true double bottom and a true reversal in a weekly support zone. That's a major buy signal. You don't have to buy. We can buy on the lower time frame. So if I mark this area, the vertical, move to the 4 hour. All right, so now we've broken it down even more. We can refine our support area. Okay, bottom of the wick, there we go, the rejection, and boom. So we have bullish moves here, bullish breakout of this range and breaking the highs here, and retesting into the support zone of the weekly, so the higher time frame zone, which was another buy signal. And then obviously we're looking at previous structure for our take profits, which is a nice take profit area here for here, and a nice take profit here for here. Then we come back down to retest this zone, and I usually do a refinement zone within the support area, so that way there I can look at a later date at this zone for the future. So looking into the future, and there we have another buy signal within here in the reference zone, especially when we have a little range in here, right? And then we have a breakout of the range here, bang. So now we have a breakout of this rejection zone here, right? And a candle close above, candle open, and bullish engulfing. Therefore, that's a buy signal within the support zone or support area, and we're really just looking to take profit at potential rejection zones, and or we have a clear change of structure here. So new high there, double bottom, reversal structure, boom. We could be looking at taking profit here, taking profit there, taking profit there. So, and then that brings us into the continuation phases of where support is. So support, right? Oh, just put it as demand, just so because it's green. So we have support. We have a break, retest of the area, and again, and then we have the next support zone here. So we'd be looking for buys in here, and we can break it down even more if we really wanted to. There we go. So now we're on the 30-minute time frame. We have a range here, breaks out of the range and closes, and then it comes down to retest on that wick and moves up again. And then you see here on the 30-minute time frame another support forming there. So there's support forming there. There's support everywhere on the time frames. Depending on which time frame you're on, will give you like obviously there's support here, but if you bought here, you might get stopped out. So you need to understand where support is and utilizing the higher time frames for a better support zone. 30-minute time frame, you really need to know what you're doing. So if you don't know what you're doing, or you're not experienced enough to be on the 30-minute or the 15-minute, then stick to the 4-hour and the daily, because these moves are coming, and they give you time on these time frames. So you might be in a long here, right? And depending on your trading rules, you might be taking profit there and there, as I said before, or you're trading more right, double bottom. So double bottom, bang bang, and moving up. So and then you can see the continuation of support, and then you have. I'm not going to get into trend line support just yet, but yes, we do have a support forming up here. Then we do have a support here, which is now broken. Okay, broken. So support becomes resistance, and that will be the next video. So, but I think that's enough on support. Like, I feel like I've just given direct information, and it's a very easy subject in my opinion. So sorry if that's coming across a little bit not so considerate, but in terms of support, that's it. You know what I mean? This is as hard as it needs to be. I don't believe it needs to be any harder than this. So a price where a level of price where it's accepted by the market, by the people who are watching, and especially there's a refinement in support, so you can always refine your support areas. So I do utilize the wicks, and you'll get the support like this on the lower time frames, and this is also valid on the higher time frames. Would you buy here? Yeah, in relation to the lows, it is a higher low. Like there's a higher low, and forming here. And then if we look at the 4-hour candles, we're also seeing the lows increasing. So until it comes down, finds more liquidity within here. So there's probably some more orders in the order book that need to be taken. So people will hedge their positions to short it because they're probably in here. Which goes into a bit of more an advanced concept of trading. So, if I was bought in here and I've rebought in here to scale my position, but I didn't get a full fill, then my best interest is to short the market or push price down and hedge against my own position to fulfill my order. So technically, you know, I'm taking profit from. Now this is where it gets where you're betting against the liquidity provider. So you know, because you borrow the contracts from the exchange, so the exchange has to pay the difference. And this comes to on a very advanced level of trading where big players are involved. So big players will buy here, try to scale in. If they don't get a full fill, they will push the market down to get a full fill because they're taking money from the exchange, and then they're filling their entire position to keep going. So, but that's another story, and I'll leave it at that.